Hi there. My name is Scott Marker, and this is another episode of Treasure Valley NIA Quick Tips. What this is I'm the franchise owner of a Network in Action franchise, which is a once a month professional referral groups. I've built out three. They're out of Houston, Texas, and I'm the first one here. And it allows me to be around a really just high caliber local business professionals that are experts in their fields. And this is how this show came to be, is I just thought a lot of them should be spotlighted out in out in the public and social media. So today's a perfect example of one of those. And introduce yourself, Rick.
Hi, Rick English, Up Advisors. We're a small business consulting firm focused on helping small businesses build the infrastructure in the form of people, process, product, profit, and customer experience that they need to achieve their growth goals for their business.
That's awesome. Like I said, I've known Rick for quite a while, and I'm friends with him. And I just got to say, over the years in the past, I had a lot of friends that called themselves business coaches, whatever they want to call themselves, and they really just didn't have the background. So, real quick, Rick, just give your background of what I mean. You're not just somebody that decided one day you wanted to help small businesses. What quick overview of your background?
Yeah. So I spent 18 years, 26 years in the insurance industry, 18 in the brokerage space. Initially in a claims capacity, ultimately went into an operational role and operational leadership role. Ultimately became a COO and served as a CFO. And then the last 3 years before I started this business, I was a CEO of a $23 million company. So.
Yeah, that's what I love, because you just take that knowledge and apply it to a small business.
Yeah.
So before the show, we were talking and kind of some of I want to really get, what I want to let business owners know. One is that you're out there available for them.
Yep.
So here in the Treasure Valley, do you fly out? I mean, I'm sure you have clients across the country. So do you do like Zoom type consulting with them?
Yeah, locally I'll do in person, but even quite frankly, most of my local customers prefer Zoom because they're busy. It's just more efficient. I don't have to drive to a coffee shop or come to an office to meet in or whatever. So do most of my calls via Zoom, but yeah, I work with people all across the country, everywhere from North Carolina, California, Arizona, Colorado, and everywhere in between. So
awesome.
Yeah.
So we picked some things today. We kind of some of the biggest things that businesses really need to focus on, and people like you can help them out with is why is it important to have good financial data and numbers in a business?
Yeah. Well, this is probably number one, number two biggest challenge that I see is business owners who don't have good financial reports. And they don't know their data. A lot of business owners are using some sort of technology. In the trades, you'll hear of, in the service industry, you'll hear of House Call Pro or Builder Trend or Jobber. There's a bunch of those. They have really good data that's available to you, but it's not necessarily being used. It's being used as a system to do certain things, but they're not pulling the data out. But on the financial reporting side, having an accurate profit and loss statement, running a cash flow statement. Most people don't even know what that is. In fact, QuickBooks, if you go into QuickBooks, which most business owners use, you go in and you'll see profit and loss, balance sheet. You might see receivables, but you don't see the cash flow statement in the top three. The problem with that is that most business owners have some sort of payments that they make. They either have loans, they have on equipment, they have a loan for their business, an SBA loan or an idle loan, and they have capital going out to pay those loans. Well, that capital does not hit your profit and loss statement. And quite frankly, most bookkeepers and tax preparers, CPAs, they don't even post the interest expense on your profit and loss. So, what I see a lot is bookkeepers that will do bookkeeping on a quarterly basis, or they'll do it on a semi-annual basis, or some people they get it cleaned up at the end of the year. Well, how do you know what your profit margin is? How do you make good decisions in your business? How do you know what your receivables are? Are you tracking those? So having, an accurate profit and loss, an accurate cash flow statement, an up-to-date age receivable report, and a balance sheet is just critical to being able to make really good decisions in your business, breaking out revenue on your financial reports. So if I've got a client who's a gutter company, and they have they have kind of few different kind of lines of business, or what I would call a business unit. One would be working with contractors. It's lower margin business. Well, let's track the revenue we get from contractors. Let's track the revenue we get from direct to consumer. Let's track the revenue we get from services like gutter cleaning and that sort of thing post. And then track the expenses associated with those. Now we've got these business units. We can see how they're performing. We know which ones have a higher profit margin or a lower profit margin. We know which business maybe we shouldn't be in. Maybe we should stop working with contractors. But if everything's lumped into sales and everything's lumped into just expenses, there's no way to know that. And most business owners don't realize they need to do that, and they don't do it. But how do you determine growth? I had somebody tell me not too long ago, their business was blowing up. I went in and ran reports, and I was seeing year over year, they were about 2% growth. Most people wouldn't describe that as blowing up, but that was the perception. And that perception is based upon what happened last month, not what happened the whole year. So, can you determine your profit margin? I recently did a forecast for a client, and first we got the books cleaned up, because can't forecast off of bad information.
Right.
And ultimately, we're able to determine that if the pricing and expense continued at the same and the revenue that we expected, they were going to lose a bunch of money over the last 6 months of the year. So because we're able to do that, we're able to determine, okay, where do we need to make adjustments? So we started looking at the pricing strategy, started looking at the costs, determining whether or not we need to subcontract versus, have as much of their own staff. There's so many different things that you can do if you have good information, but absent that, you're just making decisions in the dark. And so it is such a huge component. It's become a really important part of what I do. A lot of times with the business initially, so that we can then work on the people part. We can work on the process part. We can work on the customer experience part, the product, those sort of things. But it also feeds all of those things. So if we have good information, we can make decisions in all those areas. If we don't have good information, it's really, really hard to do that.
Yeah. So it's like anything. Good foundation. If your company's boat's sinking because you think you're making money or not, it's hard to build your, hey, let's hire some more people when you can't even afford to.
Exactly. Well, and you see people will manage their business based upon how much money's in the bank account. Well, they may see a big number and then they go, oh, I'm going to go buy my dream truck. Well, they haven't thought about, okay, what is the impact of the $1,500 a month payment? Do I have the margin? Do I have the profit? Am I paying myself already what I want to pay myself as a business owner? Do I have profit at the bottom, at the end of the month? After I pay myself what I should be paying myself. So, there's a lot of those decisions that end up getting made without the right information.
Yeah, that's great. It kind of segues this real quick. You almost sound like a fractional CFO.
Yeah. Well, I like I said, I was a CFO for a period of time. Yeah. I get the numbers.
Okay.
It's just that, and it's probably, when you talk about experience, I bring a lot to the table for a client. So instead of them having to have 5 people that they're working with, we can dig in. And this is why I like working with small business owners, because most of them can't afford to go out and hire 5 different people to help them in 5 different areas of business. And so this piece, there's a component of what I do. I don't pitch myself as a fractional CFO.
Right.
I pitch myself as a business partner, which we can touch on a little bit later, but really coming in and helping out in those areas. And then ultimately, I don't want to be a bookkeeper, and I don't want to be your CFO necessarily for the long term. If it makes sense for some reason, I would do it, but that's not where I want to focus my efforts. But I do want to come in, figure out what issues you have, figure out what opportunities you have, and we can do that. We're going to do a lot of that through the financial numbers, so we can then work on the rest of that stuff. It's just essential. Not in every case, but in a lot of cases, in most cases, that's where I find myself, the approach that I end up taking.
Perfect. So it goes on to the next question is, so what's the impact of good consistency on a small business?
Yeah, I call it good consistency. I think it just requires the preface, because there's a lot of bad consistency. consistently not meeting with your team, consistently not doing things the same way, consistently not knowing your numbers, for example. So those are all, we're consistent in our business. We're just not consistent in a good way.
Right.
I found myself saying more often, good consistency drives efficiency in your business. And the impact of good consistency is lower costs, right? If you are consistently doing things and driving efficiency into your business because you got repeatable processes, you're gonna have lower costs of doing business. And that comes in the form of, your customer's gonna be more satisfied, you're gonna have fewer callbacks, your fewer errors, depending upon the nature of your business. If you're in the trades, it's probably gonna be fewer callbacks. You got to go out. It's very expensive to go out and fix. A lot of these people have already paid their employees once. You don't want to pay them again to do the same job, right? So consistently having good quality control, consistently following the checklist, consistently following your job completion process. Measuring twice, cut once is a
love it. It's
that
true.
Same sort of thing applies not just in woodworking, but it applies throughout everything. Making sure that you are consistently looking at your business, your process, and making appropriate changes. Ultimately, it increases your revenue too. Why? Because sometimes people say, well, we've always done it this way. Well, if you've always done it that way, and it's not the best way, let's do it the best way.
Right.
Because if you're not having callbacks, you can do another job. You can stay on the jobs that you're getting. So there's only so much time in the year. For most companies, it's 8-hour days, 2,080 hours a year.
Right.
If 100 of those hours are spent going out and fixing your errors instead of doing that you don't get paid on, versus those 100 hours being spent doing new projects, your revenue is going to go up. And if you've got good profit margins, your profit's going to go up. So it kind of ties back to the previous question, but and ultimately, one of the things that it does is it creates a culture that attracts the right people, and and pushes away the wrong people. If you run a really consistent, tight business, people who just like to wing everything aren't going to come work for you.
Right.
But people who work in that sort of environment, work well in that sort of environment, they're going to perpetuate that consistency. And the last thing is, like, if you're in a business that you want to be able to franchise, that consistency.
That's true.
Think about
it's called McDonald's syndrome. It's a McDonald's model is. And anywhere you go, it's the same. And what is that? That's spot on. It is. It's consistency.
No, you have these trades businesses where people are going out and buying franchise. It doesn't matter what it is. The way that they're able to effectively franchise and grow the franchises, they built it in such a way that it's so efficient and so easy to do that anybody can come in and follow it, provided they have the requisite skills.
What that reminds me of is years ago when Zig Ziglar was alive, I went and watched him speak, and he talked about new businesses, and he had this old well pump, and he was pumping. So when you first start off, you're pumping, you're sweating, and all this dirt and grime's coming up. Because all of a sudden there's this pure water. So he leans against the table, right? He goes, you know something though? Now it's not as hard, but guess what? You got to consistently keep going. And so that's exactly what you're saying is that, you get going, all the systems are in place and stuff. Now it's not as hard, but you got to be consistent following all the.
Well, and Scott, you're a big sales and marketing guy, right? So it's the same thing applies in sales and marketing. Like sometimes business owners will be consistent for a while in their networking or in their marketing, and then they get all this business and they stop doing it. Right. Then the business dries up, the customers go away, or they've served all of them. Now they got to get back out again. So even in things like the sales and marketing, it's so important that you're consistent in what you do, consistently prospecting, kind of along your little, I can't remember what you call that, but
strategic customer cycle.
Your customer cycle, right? So it's that same thing. If you're consistent in all those areas, it ultimately drives efficiency in your business, drives growth as well.
It's awesome. So here's one is, why should a small business owner monitor and manage their working capital? Now, I'm going to tell you real quick. This is something again, I bet you a lot of people like me, I I love running a business and stuff, but capital and all that stuff, but I know it's important.
Yeah. Yeah.
So
Yeah.
again, why is a small business owner, need to monitor, manage their working capital?
Yeah. Well, one of the things that I like to do with business owners is establish, some people call them KPIs, key
Okay.
performance
Yep,
indicators,
yep,
key measurables in their business. And one of those is always the working capital. We set a working capital goal. Some business owners are really happy running super, super lean, close to the edge. Others want to have, a substantial amount of working capital. But ultimately, you want to have sufficient working capital in your business, or at least access to capital in the form of a line of credit. Right now, that's super expensive.
yeah.
Right? Line of credits are trending over 10%, uh,
Jeez.
on an annual basis. But I love to see, cash working capital. Depending upon the business, it could be as 3 to 6 months of their expenses. It could be less. It just depends on the business, and we work together to set that goal. A lot of that's tied to whether or not they, what kind of growth goals they have and how much they need to fund those that growth in their business. But ultimately, you set that metric. It enables you to operate without fear.
Right.
Enables you to operate in a way that you can make good decisions. If you need to buy a piece of equipment, you
Yep.
have the down payment
Yeah.
and
Yeah.
the access to some additional capital, you finance it or whatever. But you can do that and be thoughtful and not stressed and not make rush decisions or drastic decisions. And it also enables the business owner a lot of the time, from what I've seen, to not have to jump back in. What tends to happen is, because they're low on working capital, they can't go hire that next person that they really need,
Oh,
so they jump back into the business. Now they're working
right.
in the business instead of on the business as much
Right.
as they'd like to,
Right.
which ultimately can stunt the growth. So it's just that working capital just enables you to make such good decisions and
Right.
have the right mix of people, have the right mix of products, be able to invest in new products. If an opportunity comes and you can, buy some equipment at a discount, you have access to the
Yeah.
capital to take advantage of that versus paying full price.
That was exactly what I was thinking of. You
Yeah,
just said, you read my mind. I was just thinking,
exactly.
you're a tradesperson and some piece of truck or something comes up that, I mean, it's like just the steel, but if you have no extra working capital, you're going to
Yeah.
miss an opportunity.
Well, and you can make payroll, and
Yeah.
look, it's really, really hard right now to find good people.
Yeah.
And so as a business owner, if you maintain strong working capital, you're able to keep good people. That
Right.
also obviously requires, you gotta price things properly. It goes back to what we talked about at the beginning. You gotta price things properly. You gotta be driving dollars to the bottom line and not taking too much out of your business, which
Right.
is, perhaps a subject for another podcast.
Yeah. Yeah.
Uh, but uh, but yeah, it's a huge factor for business owners to have the sufficient working capital to
Yeah.
operate the business optimally.
Yeah, a lot of these, I tell you, a lot of these are the things that people like me, as I'm a business owner, I have two businesses, is that I just don't like to talk about. But if you don't get, my one of my businesses for a year, I did my own bookkeeping, and then I look back and go, wow, that was spooky.
Yeah,
I didn't know day by day what was going on. But
yeah,
no, but the thing is bringing in someone like you is it's this part is like, now we got the ship, running good, and now we can focus on the people, the
yeah,
processes.
yeah,
Yeah,
exactly.
that's really what it is.
Hey, Scott, you hit on something just there that I meant to talk about a little earlier, that the importance of a good bookkeeper. I
Yeah,
mentioned that some bookkeepers will,
yeah,
categorize transactions every 6 months
right,
or every quarter. I teach business owners to categorize their transactions every month. We want
right,
monthly reporting. And
right,
so
right.
there's some really good bookkeepers out there. I think there are a lot of bookkeepers who just do what the customer wants. And so I teach my clients, like, this is how we need to do it so you can have good insights. And then I want to find bookkeepers who will actually follow that. Same thing, tax people. Sam Clegg. Sam's a great guy.
Love Sam.
Brian McGaw is another guy that I really like. Tax people. You need to have a good tax person who is committed to you getting good financial data and doing things the right way. It may cost you a little bit more, but you'll get 10x plus return on that investment just by having good information to make great decisions in your business.
Yeah, and that's really kind of like a talking about like Sam Clegg. Perfect example is, you have, and I talked about this just yesterday in a meeting with him. As I said, I'm finding out that there's two types of accountants, right? There's accountants that do your taxes, and there's other ones that are strategic accountants.
Exactly.
They're looking at your business now and in the future and next year, and not just, hey, I'll see you at the end of the year, because by the time the end, just like working with you, right?
Yeah.
Is every month you're keeping the ship going in the right direction, right? You're not going to wait till the end of the year to figure out, because by then it could be too late.
Yeah.
So that's, I mean, so you would, I mean, you and I thought about that too. Was it you and like the CPA and stuff are just great partners, because you can all be on the same page, and you can also be helpful because, again, exactly what you said, a lot of business owners don't know what to ask their bookkeepers or accountant, and so you can come in and say, oh, no, we need it monthly.
Yes.
And maybe they have a fantastic bookkeeper that maybe told them that once, but didn't, and you come in, can be, reinforce that no, we do need that information. So that's awesome.
Yeah.
Why should a business owner have a strong outside equity business partner?
Yeah. I actually said it's a non-equity business partner.
But non-equity.
The whole idea is there's a mixed view out there about having business partners. I think most people have heard of failures in partnerships. There's been obviously some amazing partnerships over the years. If you look at some of the firms that are out there, law firms and accounting firms and plenty of other firms where partnerships have been wildly successful. But I think generally there's a concern about partnerships and offering equity. And a lot of time, most business owners don't have partners. And even if they do have partners, it makes sense to have an outside non-equity partner. Some people may call it a coach. Some people may call it a business consultant. I refer to it as a non-equity business partner.
Okay.
And, some coaches make you sign up for, a year or 15 months. I've heard all different things. But this person, this non-equity business partner, which is kind of the work that I like to do with businesses, is somebody who comes in, they dig into the business, they identify your issues, they identify your opportunities, and they're completely honest with you. They're just going to tell it to you like it is, out of respect. There's no judgment in it. And they come alongside and they partner with you to help you get clear on where you want to take your business, and then take those steps to actually make that a reality, or better than even what you pictured. They don't require the long-term contract. You pay them as long as they're adding value, right? So that's you may pay a little bit more than you pay a business partner, but you don't have to go through the whole exercise of firing them, trying to figure out how to fire them or break up the partnership or whatever. A good, strong business partner is a non-equity business partner is going to also dig in and do some of the work. I know there are some folks out there who do, coaching or consulting that they're really just telling you what to do and holding you accountable. Right. And that's important and valuable. But that's not a business partner. That's the business partners coming in and actually digging in and taking on, and helping you where you need help. They act like they own the business, but ultimately the decision is the business owners. Right? So they don't have to, they get the benefit of that other voice, that outside voice who didn't start the business and who isn't thinking about all the sunk cost, all the money they invested, that, it's sunk. And they're able to say, look, that's a sunk cost. You need to move on, or you need to get out of this business, even though you've been doing it for 5 years. You need to get out of this and focus your efforts here, because that's where your growth is, and that's where your profits are going to be, and that's what's going to enable you to achieve your goals personally and professionally. So
I love that, because I've never even, that's a great way to kind of explain that, non-equity business partner, because that's true. That's like, you're not, because a lot of times you do need a partner, but you don't always need to have one that's legally a partner that's going to have part of your business.
Exactly.
Right.
Yeah. And, I mean, so many business owners are, they're in charge and they don't have, they may have a friend who they get advice from, which is important and valuable.
Right.
But having somebody who has a track record of running a business successfully, of growing a successful business, there's a lot of people out there who will give business owners advice. I remember one situation where somebody had a loan and had gotten a loan and they hadn't used a lot of the money and they could have paid off a bunch of their equipment and that sort of thing. But the person who was giving them the advice was like, hey, you should use all that money to pay this off. Well, it sounded like a really good idea, except they didn't know what the cash burn rate was in the business. And so if you're burning a lot of cash, and you're not paying attention, you don't understand it, but your non-equity business partner has dug in and understands it and can say, wait a second, before you take that advice, let's figure out what we're going to do from that to affect that cash burn. Because if you're going to keep burning cash at that rate, you're going to need that money that you're going to now go dump in and pay off all your equipment. And if the delta between what your cash burn rate is and how much you're going to save by having all that equipment paid off isn't sufficient, you're going to end up with that. You're going to run out of money.
Yeah.
So it's stuff like that where you need somebody to come in and that comes alongside and helps you make great decisions. And you know what? Once you're done with them, you can find somebody else that can take you to the next level if that person can't take you any further.
That's great. Hey, this has been great, Rick. I love this stuff. And this is stuff that's super important. And I like talking to you because you can bring, it's just, you talk to so many small business owners, you see patterns.
Mhm.
And so it's great that you can then share, and then plus your expertise of working for a big
Yeah.
company, you bring the expertise in. So that's great. So,
Yeah.
hey, what's the best way someone could reach out to you if they want to talk to you, Rick?
Yeah, best way is to call or text. My phone number is 208-565-6099. And I respond to text quickly. I don't mind phone calls. I know a lot of people don't like phone calls. I still enjoy talking on the phone. So yeah, either of those ways, and happy to give an email address too. But those are the quickest ways to get a hold of me.
Great. Yeah, and I'll have in the show notes so all your contact information. But yeah, I really appreciate it. And I know this show is going to be good for the viewers. And so I wish you the best, Rick. And until next time, I'd love to bring you on again if you'd want to. So
Absolutely. Thanks, Scott. Really appreciate it.
hey, thank you, Rick.